Hey guys, Stock Saturday. So we've had a bit of a rough week with the FOMC meeting and then some rough economic news, which I can get back to later. But that has caused sort of issues in bond markets, sort of falling yields, and sort of expectations of a steeper rate cut, sort of the day after the or 2 days after the FOMC meeting. It looks like they were maybe a little bit wrong-footed and should have been cutting before now. Sort of increased expectations of a recession. But yeah, so that has caused quite a bit of red. I'm down about 13% for the week, which is heavily underperforming the market. That's about £44,000. I have added 4,000 into interactive brokers, which is not included in that return number. But yeah, comparing to the S&P, down about 2.37%. So not a huge surprise that I sort of have an amplified move of this downside. Nasdaq is down 3.56%. So even sort of three and a half, 4 times the downside of the Nasdaq. So yeah, rough, but this is all short term. We're looking for sort of end of next year, so you got to zoom out and take these on the chin. So first week of the month, we have the Bitcoin mining updates for the most part. CleanSpark have released their July, looking reasonably good. 494 Bitcoin mined in July. They're up to 7,082 Bitcoin on their total Bitcoin holdings, which are pretty good. Getting very, very close to Riot's now. So yeah, that was sort of Riot's big thing to shout about. The sort of huge hodl compared to some other miners, excluding sort of Marathon, but they're the big boy. But yeah, CleanSpark are sort of rocketing up towards that number. 160,900 machines in the deployed fleet with an efficiency of 22.89, which is very good. The acquisition of grid infrastructure has added an immediate 1 exahash of hash rate in July, and they are progressing towards 32 exahash by the end of the year. So they sold 2.54 Bitcoin, just to fund sort of a few bits and pieces, I'm guessing. Everything else is kept. And on the growth side, Tennessee, this Tennessee location added 1 exahash. They're actually expecting another 1.28 exahash to begin hashing at the end of this week. So yeah, that's going to provide a fair boost for pretty much the whole of August. So that's pretty good. More in Wyoming, 75 megawatts executed, and it's expected to add 2 exahash before the end of the year. But these are sort of new buildings from the looks of it. Company expects to proceed with the closing of a second site in the coming weeks. And Dalton as well, the sort of small expansion they've been doing. Lots of small sites for CleanSpark, leading to approximately 0.9 exahash on completion by early September. So sort of in the next month or so. As I say, small gains for CleanSpark, but yeah, they do have the sort of 21 exahash already online, so they're producing quite a lot. Moving on to Riot, we don't have the July operational update yet. They've been sort of lagging a few days behind everyone else last few months doing these, but we do have Q2. They're the first to do Q2 results, so some interesting bits and pieces in here. I thought this was a little bit more useful than the actual financial quarterly report. They sort of give some more stats in here. Direct cost to mine is up to 25,000, up from I think it was 23,000 in Q1. So with the halving, that is pretty solid. You sort of expect cost to mine to be doubling really with the halving. so 62% gross margin, very low cost of power. So they give a bit more detail on the block mining acquisition. Obviously this expands them to a second state where they were just Texas. It now brings them into Kentucky, and they have 60 megawatts currently developed with a potential of 305 megawatts. Riot do sort of have these enormous, great big numbers of potential megawatts. Obviously that's would need a lot of building over time, and these miners aren't sort of something I'm probably looking to be holding much past middle to potentially late of next year, but yeah, everyone likes to sort of see future growth. So yeah, self-mining hash rate currently 1 exahash, and the year-end target for the block mining side of it is 4.8, and in total there's potential to expand to 15.8, which I think they're looking to get by the end of next year. So yeah, people will be looking at that, and they've updated their sort of quarterly chart. So they're now looking at 28.1 exahash for the end of Q3. They did hit 22, so they're probably a little bit ahead of 22, maybe 23 and a half, 24 at the end of July. And then what was 31 and a half, I think, for the end of the year is now 36.3. And again, what was, I think, 36 for the first end of June next year is now 43.6. And then 56 for the end of the year, which was, I think, 40. So big targets and a big expansion with this acquisition of Block. So very nice. They've added the Kentucky expansion into their growth plans, which they are still saying is fully funded. Obviously, they are still diluting shares. It's a little bit strange. They're sort of projecting in this to use up some of their Bitcoin holding, but they aren't actually sort of using it yet. And sort of they're saying estimated Bitcoin production would pay for a lot of this, but again, they aren't actually using it at the moment. So they're saying we would pay for it with Bitcoin, but then diluting shares to hold on to that Bitcoin. So really, they are sort of paying for it with shares, which would be nice if they were sort of at a much higher valuation. But when they're sort of fairly low valuation with what sort of most holders would consider their worth, it's not ideal, but yeah, it does keep that sort of large Bitcoin position for unrealized gains every quarter now, where they're sort of reporting the exact cost every quarter. So just looking at the more detailed reports, they sort of break down their Bitcoin mining, engineering, and they've now got this other category, which is sort of the legacy hosting side, the sort of data centers and things. They were sort of rolling this into Bitcoin mining before, and they've now sort of broken it out. They're looking to sort of get out of all of these contracts and just focus on Bitcoin mining. But they have sort of a few hangers on that don't want to cancel their contracts, and they're sort of in a little bit of litigation regarding sort of terminating other people's contracts. So there's a potential for sort of a bit of costs there. Cost of revenues obviously up with the increased hash rate. Not a surprise there, but the other cost of other is down from 22 million to 10 million. So it was the hosting side was a sort of fairly unprofitable business, and as they sort of wind this down, that should help things. And you've got selling, general and administrative up very significantly. The Jason did say on the sort of Q2 discussions that this part of this is one-time costs, sort of as a result of both bit farms and block mining. You've got stock-based compensation in here as well, which they sort of they have long-term targets. You know, it's a sort of a load of stock. Which will be granted if, you know, Riot, I don't know the sort of exact numbers, but say Riot get to sort of $40 or $50, then all of this stock will be granted, but they basically put it into the costs as if it all has been granted on day one, and then it's sort of amortized over that time. But so you get a one-time immediate hit, and then sort of over time, if the stock gets to sort of high prices, and I think it's based on EBITDA and stuff, get to those targets, then those shares come into play. But nothing happens at that time. So bad news first and then good news over time, basically, which I don't mind. And then balance sheet, so they've got 481 million in cash now, down a bit from 597, but they also have this extra line of investments in marketable equity securities, 157 million, which I think is all Bitfarm stock pretty much. So that's interesting. And 585 million of Bitcoin. So that's at June. Obviously, that's changed a little bit since then. $1 billion in property, plant, and equipment as well. And on the debt side, they sort of still don't really have any debt at all. They have a few sort of short-term and long-term liabilities, suppliers, and all that sort of thing. That's fairly normal, but 139 million of total liabilities. That is down from 163. So they have over 3 times the total liabilities just in cash. So it's an incredibly strong balance sheet, albeit they they do keep diluting to maintain this balance sheet. And they have updated their stock total shares outstanding since this. I think this is a little bit out of date. They have said at the time of releasing the results that they are up to 303 million shares, which they say does cover a great deal of the cost of acquiring Block. My sort of previous projections in my spreadsheet were sort of 300 million as opposed to 303 million they've now got, and that will grow sort of over time, but I wasn't counting any of the hash rate or sort of forward hash rate growth of the block mining acquisition. So it seems to be accretive dilution, basically, so it doesn't bother me too much. So moving on to Hive Digital, my sort of small miner play with potential growth. They mined 116 Bitcoin in July, ended July with a 4.9 exahash capacity. I think this is a little bit behind target. They were sort of saying they wanted to get to 5.5, I believe, so maybe that's been a little delayed. HODL increased to 2,533 Bitcoin, which is sort of over a third of the market cap, so that's quite nice. Not sure whether I don't think they're doing the same accounting rules as the US, so they don't sort of report increase in Bitcoin price as net profit, so there's potential that they won't see as much gain from that on the upside from sort of layman's in Bitcoin's terms that just look at net profit, and they won't see sort of the same huge gain in sort of unrealized gain on the Bitcoin. Whether they sort of want to start reporting that way, don't really know. But yeah, 164 million in Bitcoin value as of July 31st. So very nice, and they are expanding. Made 3 purchases of new ASICs, 7,000 S21s and 2,500 S21 Pros. So very nice. That represents approximately 2 exahash, and all of the 9,500 have been delivered. 8,400 have been installed, with the remaining 1,100 expected to be installed this week. So this will bring our total installed capacity to 5.5 exahash and fleet efficiency of 24.5. So CleanSpark are at sort of mid 22s, I think it was. What do we have? 22.89. So Hive are a little bit higher than that. We've got some sort of legacy machines which they haven't been replacing. And they have sort of said some of their older models, some of the 30 joules per terahash models, they're going to downclock and sort of carry on using to try and get a little bit of value out of them. basically saying, you know, if they're profitable, they'll run them. If not, then they won't. So that seems fair enough. If you've got capacity to run them and they're profitable, you might as well. I think the big potential with Hive is their AI strategy, because they were mining Ethereum sort of back in the day with the NVIDIA GPUs before Ethereum transitioned to proof of stake, and they've sort of obviously kept the GPUs and they can be transitioned to AI. So rather than just some of the other Bitcoin companies obviously are transitioning, allowing some AI companies to come and use their power, and they'll sort of host other companies. Hive are actually sort of, they have the GPUs themselves, and I believe on top of the GPUs they have, or they had, they've also bought a load of the sort of brand new H100s. I do think they have H200s out now, but the H100 chips from NVIDIA that are sort of hotting up the AI world. So yeah, if they can, they're sort of talking about, they have this 250,000 a month, $250,000 a month figure that they're sort of a little bit of a gimmick, but they're saying they want to go to 250,000 a week and then 250,000 a day, which I think takes them up to sort of 100 million a year of annualized AI revenue. So if they can get to that, on top of sort of having, I think they're looking at 8 exahash over the next sort of, or by the end of the year, with their Bitcoin hodl, I do think they are very, very undervalued, potentially more than Riot. So that is why I've been buying an awful lot of Hive options, not stock. I've been looking at maybe increasing my stock a little bit, but yeah, the options look very, very attractive. So we'll have to sort of keep an eye out. They haven't really given us any numbers at all on the AI side. Maybe it's sort of a little bit slow going, but yeah, I would like to sort of see where they're going to be by the end of the year. A little bit more sort of solid figures. Just going back to Riot as well, their Bitfarm stake they have now reported is up to 16.9% as of yesterday. So they bought a little bit more, I wouldn't say on the dip yesterday, because they're saying they've paid an average of $2.40, and I think Bitfarms is now $2.18. So maybe not the best buy, but when you're buying sort of lots and lots of shares, then yeah, you're maybe not going to get the best price, sort of $1 million worth of shares. Yeah, maybe you don't get the best price, but yeah, that's sort of nice to see and puts them in a fairly strong position, I would think, towards potentially buying them outright. So with the block mining acquisition and Bitfarms, that would put them sort of way, way out there as the biggest miner, sort of, if not by the end of this year, into next year. So yeah, interesting to see sort of how far they do take this. So economic news this week, we had quite a lot of bits and pieces. Provisional July inflation from Europe was slightly higher than expected, not ideal. ADP employment change was lower than expected, is often sort of different to the non-farm payrolls official, say official in inverted commas, report at the end of the week. And then Wednesday night you had the sort of no surprise, no change from the Fed, but he sort of basically said a September cut is nailed on, and everyone sort of responded to that very well, but it was short-lived, as we'll sort of come to. House price index up in the UK, surprisingly. Some fairly weak numbers from the US in terms of jobless claims, continuing jobless claims higher than expected, initial up as well. Oh yeah, the Bank of England did actually cut 0.25%. That was sort of consensus. They had one fewer member vote for the cut than expected, but they did cut. So yeah, we've gone first, if you like. And then yeah, Thursday afternoon you had some sort of very weak numbers from the ISM US. 43.4 on manufacturing employment, manufacturing PMI 46.8, so below 50 is generally considered contraction. GDP slightly lower than expected, but that's the Fed GDP now thing. They sort of update this all the time, and it's very, very volatile. But then Friday was the big thing. The hourly earnings lower than expected. Non-farm payrolls 114,000 against 176 expected. And they reduced, revised downwards the previous sort of 2 or 3 months. So I think that's the quiet thing that goes unnoticed as well. Sort of the number was worse than expected, but they also said, previous 3 months are worse than expected as well. One thing to note, it is sort of largely in the private sector of 114,000. It's 97,000 in the private sector, so that's something to cling on to at least. It's not just government jobs. But unemployment up to 4.3%. Expected was 4.1, stayed the same. And sort of worth noting that the FOMC, or sort of Federal Reserve dot plot, was indicating, I think, 4.1% for the end of this year and sort of 4.2% for the end of next year. So to be at 4.3 already, I would imagine I believe a 50 basis point cut is already basically priced in for September now. So they're basically saying they got that wrong, or the bond market is saying they've got that wrong, and it will need a heavier cut in September, and they're looking at 50 basis point cuts in November as well. So yeah, basically saying it's going to have to be sharp cutting from here on. So looking at the portfolio, pretty much everything is down. As you can see, just on Friday, it was sort of rather a large set of reds. Taiwan Semiconductor and Broadcom sort of coming down with the semiconductors for the most part. Nvidia's down quite a bit. Stellantis down to $16.13 now, getting towards sort of break-even price excluding the dividends. Process holding up quite well, to be honest. Vanguard Emerging Markets is sort of holding up reasonably well, still close to 10,000. Is certainly on my potential sell pile. I realise I might be sort of throwing good money after bad, potentially selling this to buy options, but I still sort of am of the belief that by the end of next year we'll be into sort of heavy money printing, and what I'm buying should look rosy. So I'm sort of kind of expecting, between this time and end of next year, you could get 15% gain, maybe sort of 20% gain max on something like Vanguard Emerging Markets, and potentially explosive moves in sort of the gold and silver and Bitcoin options. Himax has come down quite a bit, $6.08. So the stock is down. The option side has been absolutely hammered. People are back to sort of bearish on that. And the miners are coming down as well, with sort of obviously recession fears. The base metals don't do particularly well. On the ISA side, Bitcoin miners have been cratering. So CleanSpark $13.48, long way from the sort of $21 highs. Riot back to $8.51. That was sort of in the 12s, and we were all looking bullish. But yeah, we've come back down. Gold miners, sort of, even with gold touching $2,500 briefly before sort of having a little bit of a flash crash downwards. Kua Mining sort of got to the mid sixes and is back down to 550, and Equinox down to $5.18. So yeah, bit of a strange hit. I suppose everything gets hit, including gold miners. It's still stocks, and it still sort of can sometimes come down with the rest of stocks, even if the underlying commodity is doing well. Obviously, I see that as a fair bit of an opportunity, so I've been buying a little bit more on the options side. Interest in my two sort of fairly small positions now in comparison to everything else, but American Tower and Vici sort of doing quite well off the back of the rate cuts. American Tower, I believe, was up 10% for the week, and is up about 20% for the month. So doing really well. I was a fair bit in the red on that, excluding dividends, and it's sort of, I think including the FX impact, I've got about 7% green FX impact from that on Trading212. So I'm actually about 6% in the green on American Tower, and a reasonable amount green on Vici. So nice to have. I can't say I'm not considering selling these and potentially buying something like Hive Digital, obviously for expectations over the next year and a half, but yeah, it's risky, so don't know. On the interactive broker side, obviously KGHM is coming down with copper coming down. Pan American still sort of $21. That's not too bad. On the option side, well, you've got Chinese tech there, sort of still taking a bit of a whack on potential recession fears. Baidu now at $85. That's not good at all. Alibaba still sort of hanging around the same price. I think partly because they're just still doing more buybacks. But yeah, the option side has got kind of hammered. Equinox down to, well, because I've bought more contracts, it's sort of not down quite so much. But yeah, 577 contracts, but now 25% in the red. So not something I'm worried about. Obviously, we've got sort of huge potential green coming from Equinox with their mine, Greenstone mine, finished, and things should be looking up tremendously. Full quarter of sort of mining at $2,200 to $2,400 should be very, very nice. We've got Q2 results, I believe, coming up next week, so that should be positive, but it's really the Q3 and 4 results I'm looking for on Equinox. Coeur mining down a reasonable amount, down to, well, 310% in the green. It was sort of 450 odd. Hymax is the one that's taken a huge hit. You know, this was my top position just because of the gain. Not bought any for a while, but that was sort of 21,000. It's now down to 8.5. Riot though, well, I should change this. I've actually bought 41 contracts of Riot, made quite a big step. You notice CleanSpark is now 0. So a little bit of sort of complicated options talk, but basically the strikes for CleanSpark that I held were partly at $2.50 and partly at $7.50. So even with CleanSpark dropping down to $13, there was still a huge amount of what they call intrinsic value for CleanSpark. So basically you could buy the $2.50 strike options and you could immediately execute them and buy the stock and sell them for $13.50 a share. So they keep a lot of sort of value basically as the difference between $2.50 and the current share price. What it meant is they sort of held their value a great deal on the way down compared to something like Riot and Hive. So I sort of took that opportunity thinking, you know, there's potentially I guess, maybe a 5 or 6x on those CleanSpark options over the next year and a half compared to, you know, 20x potentially, could be even 25, 30x on the Riot ones. So I sold all of the CleanSpark and bought pretty much all of that money into Riot. Considering obviously I've got my largest position on the stock side is CleanSpark, I didn't really feel I need the options as well, and I wanted to expand Riot, so I thought rather than buy the stock, I'll go degen on the options. So Hive I have been buying as well. I haven't changed this. This is actually at 135 contracts, about £6,400. In the red, about 22%, where that was sort of doing reasonably well. It's fallen back down, obviously. But yeah, for the next sort of year and a half, very, very bullish on Hive. Core Scientific will stay in the green, obviously, because I was buying that very low down. But that's come down a little, Fortuna sort of come down a little, and then obviously, yeah, Clean Spark now at 0. And I have £4,000 cash, sort of really at the bottom, and pretty much at the bottom of the barrel of my cash position now. Sort of probably spending a little bit more than I should be, but yeah, I can afford sort of to maybe sell some other stuff if I have to. Selling other positions now would be the only way to fund sort of any more purchases. So I do have the Vanguard Emerging Markets, for example. I have a little bit of XRP, which I've sort of mentioned on the crypto side. I'd be potentially looking to sell, but that is pretty much it. Sort of pretty much all in now as far as these positions and this cash balance. So we'll see. Let's hope sort of the next year and a half looks good. And I haven't sort of timed this. I mean, I have timed this appallingly. Gotta say, short-term timing is not my forte. I was sort of buying some of these options at much higher prices than what they are now, expecting that we'd seen the bottom of this sort of short-term downturn. But yeah, short-term timing is not as important as long-term performance, I would say. Better that than the other way around. You don't want your long-term performance to be subpar. So yeah, maybe I haven't bought the bottom. Maybe there's more sort of red to come. But hopefully over the next sort of year and a half, things will look rather positive. So leave your thoughts in comments below if you guys are buying anything, if you're taking a fair bit of red, and like and subscribe. See you soon.